The first view is that we're going through some type of a triangle pattern, and that will go like this, and then we'll rocket higher. And when we rocket higher, we'll be moving up into 10,000, maybe even 20,000 or higher. We are in the process of working higher. We may be completing a wave here real soon. We may get a little bit of a dip, and then just start rocketing higher from there. The high probability move that I think is going to happen under both of these scenarios is that we will come up and we will retest those highs. We could even push a little bit beyond that all-time high, and like I said, move up to about 6,200. Somewhere between now and 6,200 is where both of these wave counts overlap. Hi everyone, welcome here to See the Waves. This is Jeremy, and this video we're going to take a look at Ethereum and the Elliott Wave analysis for it. So I want to start off, we last looked at Ethereum, it was about a month ago on September the 8th, and at that time Ethereum was trading right here. And one of the comments that I made in that video was that mid twos is going to be an accumulation zone. And so I'd painted this rectangle on the chart, and according to the analysis we were looking for a move that would have been into the 2000s, maybe as high as 2,900, possibly as low as 2,300, and it ended up splitting the difference. Ethereum came in right at that 2,600 and has begun to rally higher from here. So a couple of things is when you look at that video, and again what I'm going to show you in this video is that there's going to be multiple Elliott wave counts that we're looking at. Within these multiple Elliott wave counts, Elliott wave is deductive. Everything's possible until you can eliminate them as possibilities. And when you have multiple wave counts, you're looking for road markers. You're looking for road signs that help indicate as to which of those wave counts are going to be higher probability. And so the fact that we've come down and we tagged the accumulation zone and we've started to rally fairly aggressively higher from there is confirmation that we were on the right path in the previous video. So what I want to cover in this video is talk about two of the main macro level views from an Elliott wave perspective regarding Ethereum and what that could mean, and then also where the next higher probability move is. So let's start off with the two macro views, taking a look here at the longer term chart for Ethereum going back a couple of years. Basically there's a couple of views that we're looking at. The first view that I'm going to share with you is not the higher probability view, but the first view is that we're going through some type of a triangle pattern, and that will go like this, and then we'll rocket higher. And when we rocket higher, we'll be moving up into 10,000, maybe even 20,000 or higher. So this is the lower probability view that I think is going on. And the reason being is because the time that it has taken for this corrective wave to unfold was about 462 days. And this current corrective wave that we're in right now, if we count the move up from the summer low, we're only 163 days deep. And so if we were to stretch this out to be 300, 400, 500 days, well, that's going to carry us into early calendar year 2022. And so it's possible that a sideways correction that just slops around sideways may be the cousin wave to this big correction. Actually, I drew this wrong. It should have been from the high here. But so that was 260. And but the cousin wave to this corrective move, if this is the cousin wave to it, it basically is going to need to string along sideways. Now it could run up to a new high, and we'll talk about that in a moment. How high could we go into this new high and still be grinding along sideways? So this is the lower probability count that we're looking at. The higher probability count that I've got my eye on is a situation where we are in the process of working higher. We may be completing a wave here real soon. We may get a little bit of a dip, and then just start rocketing higher from there. So when I mentioned that 2,500 or that 2,900 to 2,300 accumulation zone, I wasn't kidding. The train is getting ready to leave the station on the preferred wave count, and the reason that this is the preferred wave count is because the dips have fallen right into the zone of where that preferred wave count would sit. So let's dig into the preferred wave count first, and then I'll talk about that sideways triangle second. Okay, so here's the preferred wave count that I'm following. Basically what this suggests is that this move higher was a wave 1, and then the 2019 move lower was a wave 2, and that we are rallying in an aggressive wave 3. This move higher from the March 2020 pandemic low is simply just the wave 1 of 3. The little dip that we saw here in the summer of 2021 is wave 2 of larger wave 3. And then we are unloading in the early stages of wave 3 of 3. Now, many times, especially within crypto, wave 3 tends to be the longest and the strongest of the waves. Now, there have been some situations at smaller degree where we saw wave 5 be that long and strong wave, especially on these moves to the downside. But at least to the upside, the extended wave tends to fall within the category of being a wave 3 extension. And this is an exasperation of that, where we are rallying in wave 3 of 3 right now off of that summer 2021 low. So where would that put us at the moment? Well, we've got a smaller degree wave 1, smaller degree wave 2, and then even this move higher. Let me zoom down to a 4-hour chart here. And even this move higher off of the low would be even more a smaller degree wave 3. So at even smaller degree, we are looking at this move off of the summer 2021 low as being a completed impulse wave higher. And off of that completed impulse wave higher, we've gotten that corrective wave lower, and then we're getting ready to rally again. So the previous video that was made was right here. And that's when we said we may get that dip down into that 2,900 to 2,300 range. As you can see, the reason that those numbers were developed was by using these Fibonacci ratios. Now, if you would like to learn more about Fibonacci ratios, I have courses that teach about these, so make sure you check out the other web assets that I have. If you like what you see here, go ahead, press the like button, hit the subscribe button, and turn on all notifications. That way you'll be notified of future videos. So within this rally higher, we've got a completed impulse wave 1, 2, 3, triangle 4. The fourth wave position is often where we're going to see triangles, and then a wave 5 to finish the impulse wave. And then from there, we've got our corrective wave lower, which is showing up as minute wave 2 from the September high down here to the September low. Minute wave 2. I've got this labeled out as a WXY correction. Just a second. Yeah, so I've got this as a WXY. So we've got a zigzag, X wave, zigzag that has come down into that low. And then from there, we have started to rally higher. So let's check out this rally that we're looking here. All right, off of this wave 2 low, we're going to be looking for another 5-wave move higher, another series of 5 waves moving higher, and we can count this as almost as being in place. Interesting thing to note, within this wave 3 right here, oftentimes wave 3 will travel 1.618 the length of wave 1. So when I was talking about those road markers earlier, this is another clue and another symptom that suggests, okay, we're on the right path here. Think of it like, or the way that I think of it is, if you're going hiking on a trail and you're out in the woods, maybe you're up in a mountain somewhere, your cell phone doesn't work, and you're walking a couple of miles out where all the trees look the same. So how do you know you're on the right path? Well, A, if there is a path, that's one way. If you're not on a path, then you're obviously not on the right path. But then also the trail guides, they'll put little markers on trees to let you know that you're on the right path. And so if you're walking down what looks to be a path, and then if you're not seeing those trail markers, then that becomes a clue that, and then if the trail starts to get smaller and smaller and smaller, well, that could be a series of clues that suggest, okay, we're not on the right path anymore. So within Elliott Wave, there are certain guidelines, there's rules that we have to contend with, and then there's guidelines which don't have to exist, but you will see them as road markers from time to time. So the fact that we have rallied 1618, went through a little bit of a retracement lower, and then we've begun to rally again, this tells us that this might have been a smaller degree wave 3, that this was a smaller degree wave 4, and that we are rallying higher in a smaller degree wave 5. And actually, I probably need to move this down a degree of trend. But nonetheless, when this is over, then what we're going to look for is we're going to look for prices to retrace back down here, probably somewhere into this zone. So we'll probably look for a high to form relatively soon over the next few days, and then a move back into the mid threes, which will set up another accumulation zone. Now, the accumulation zone that we saw a month ago that I pointed out, this one's going to be quicker because we're getting into smaller degrees of trends. And so when price is correct, they're not going to spend much time down there. That would be a road marker that we're on the right path. If prices retrace lower and then immediately start rallying higher and aggressively rallying higher. So our accumulation zones are going to begin to dissipate, and this is just going to be a relentless rally to the upside. All this is assuming of the aggressive preferred wave count is underway. Now, where might this top out here to the upside? Well, one way that we could look at this is, first of all, since we've crossed up above this high, that's another road marker, another level of confirmation that says we're on the right path. So we may come up here and we may find a little bit of resistance up here near this previous high at 4,000. Now, one way I want to verify this and check it out is we're going to add a Fibonacci retracement level to this. And what I'm going to do is, as I move this higher, I'm going to look to see where this 38% retracement level crosses that wave 4 low. And it crosses this wave 4 low right here. Now, where is the high point of this? It's right up there at 4,000, right near where the swing high is. So as we begin to build the story of what we're looking for on Ethereum, what I think is going to happen is that we may get a rally up here. We're sitting around 3,800 now, a rally up near 4,000. From there, that will finish off this smaller degree impulse wave. We'll get a little bit of a correction back down into the mid threes. And then from there, we'll look for Ethereum to rocket higher as all of these wave threes begin to unleash. And wave threes, again, tend to be the longest and the strongest of the Elliott Wave sequence, especially within cryptocurrencies in the bull market. So this is the preferred count for Ethereum, what we're looking for. Let's take a look at the other option. Let me clean up my chart here just a moment. Let's go back to this daily chart. Let me clean this up some more. Okay, so The other option, this one is still possible, and both of these wave counts overlap, is that we're going through some type of a sideways grind. Now, the wave count for the sideways grind is going to look something like this, where we've got a developing impulse wave higher, wave 1, wave 2, wave 3, and then that this correction is a larger wave 4. Under this scenario, the larger wave 4 would need to hold above the wave 1 high, which is 363. I don't think that'll be a problem. But from there, what we're looking at is a large triangle type of pattern. Now this triangle pattern, we might still be within wave B right now. So this may still be wave B, may finish up here near this previous high. This wave B can even exceed and move up into all-time high territory. So where both of these wave counts overlap, the more aggressive, we're getting ready to unload a wave 3 of 3, and this pattern, which is the triangle pattern, they both overlap and that we can see new all-time highs. And I think that becomes a really interesting scenario because as we get to all-time highs, all of the enthusiasts and all the bulls and everybody will break out and be like, oh yeah, see, I told you, Ethereum's going to, 500,000, Bitcoin's going to 1 million, all those types of wild projections. Both of them can happen under these scenarios. And what is crazy about these B waves is they tend to be sucker waves. So we could run up into a new all-time high, suck people into it, and then boom, we could get a harsh correction here in a C wave of a triangle. And that type of a pattern again would drag on into the early parts of 2022, early next calendar year. But the good news about this type of a pattern is that this would be a wave 4 triangle. That means that there is a wave 5 coming. A wave 5 would eventually carry this up into new all-time high territory, likely carried up into that 10,000, maybe even that 20,000 range. So that's the good news about this, is eventually we get these new highs, a strong move higher. If it's the triangle scenario, it's going to shake out some people, and it's going to do that via time and price. So we've got some real nice, I forgot to point this out earlier when we were talking about this completed impulse wave higher. Got real nice divergence showing up here, which is another road marker that suggests that this was a completed impulse wave. So let me get this off the screen, because where might this take us? Okay, now that we've got this as being the case, I'm fairly confident that what we're looking at right here is an impulse wave. Now what we don't know is this impulse wave, is it wave 1 of a larger impulse, or is it wave A of a zigzag? Okay, that's what we don't know right now. But because this is an impulse wave, what's going to happen next, there's a lot of things that they have in common. And what's going to happen next, and we could go ahead and write this down, and when we look at the next video that I do, maybe in the next month or so, these types of things will likely have come true. What we're likely going to see next is a partial retracement lower. And I think that's what had finished in that September low. I think that's this partial retracement lower. So so we called for that on September the 8th. Now the next thing that's going to happen is that we will get a move higher of equal length, if I could spell, or Fibonacci proportions to the first wave. Okay, and so that first wave that I'm talking about is the thing I have circled. Okay, so we've got a partial retracement. Now it's possible that this is a continuation of that partial retracement. We may get another dump down here a little bit lower. Remember, I had boxed off that 2,300 to 2,900. It's possible that prices may dump and dig deeper into that 2,300. But if it does, all that means is it's going to be another place to go out and accumulate. that's a low probability scenario. I think we are moving higher, and I think we're going to move up here and really test this and possibly break into a new all-time high. That's what these are going to have in common with one another. So assuming that this is the low, then what we can do is we can measure out the length of this first wave higher, project it at the low point here, and we could see where this comes into play. And so we've got an equal wave relationship coming into place up here. Up here near 6,200. So that is one possibility that we're looking at. Another possibility, if we wanted to be a little more conservative, is we could throw a Fibonacci proportion out there. So we could throw out the 618 level. And the 618 level comes in near 4,500. So it's right there at that previous swing high. So the high probability move that I think is going to happen under both of these scenarios is that we will come up and we will retest those highs. We could even push a little bit beyond that all-time high, and like I said, move up to about 6,200. Somewhere between now and 6,200 is where both of these wave counts overlap, and it's at that point that's where the models will diverge. One model would show we'd get a retracement lower, and then the other model would show that it would just continue to scream on higher from there. Something like that. So there's the two models. So they overlap between now and 6,200, and it could be as low as the new all-time high near that 4,500 mark. All right. So if you have any questions, go ahead, pop those into the question box below. If you like what you see here, go ahead, press the subscribe button, press the like button below. Feel free to leave any comments to chat about this. And we will see you in the next video. Good luck with your trading. Talk to you soon. Bye now.